Hey, Marcus, thanks for joining me in studio. I believe we're at a 16-year high for the 5-year bond yield. I want to get your thoughts on what that means for the economy and what that means ahead for us.
Last week, Federal Reserve increased interest rates by 25 basis points. And although there was some kind of more dovish speak in Powell's address, it is for sure the reason why the Canadian 5-year bond yield went over 4%. I think right now, like starting for Monday, it's going to be like just shy of 4%. That is the highest it's been in 16 years. And for Canadian consumers, that's worrisome. I think, though, that this is the highest it's going to go. I think that we are less likely to see another 25 basis point increase from the Bank of Canada. I think that yield is about as high as anybody wants to see it right now. As we are now absorbing the full shock of all of these interest rate increases, the next pieces of news to come out will all be downward pressure news for inflation.
What does this mean for people hunting for a mortgage right now? I mean, 5-year bond yield rate affects the 5-year mortgage rate. Are you going to take a 5-year mortgage right now?
I'm not going to, no. If you're shopping for a mortgage right now, you should listen to the last podcast we did maybe a week or so ago, where we analyzed predictions on where interest rates are going to go based on a kind of conservative viewpoint and an optimistic viewpoint. And we assessed what product would be best. I think we ended up somewhere between a 2-year fixed or a 3-year fixed based on what's going on. The bond yield at that time was probably 30 to 50 basis points lower than where it is right now. And that means that you're going to see the interest rates on the end of that. So the 4 and the 5, even the 3 will have all increased from that show. I think what it does is it highlights the importance of getting a pre-approval. So if you are renewing your mortgage in the next 3, 4, 5 months, get pre-approved just to lock in an interest rate. Remember, it's free for a pre-approval, right? You can get a pre-approval and you don't even have, even if you know you are approved for the amount of money you want to borrow or the amount of money that you need to switch from one lender to another, get the pre-approval just to lock in the rate. So if this guy that you're listening to on YouTube right now is wrong and yields go up even higher and we see a 5-year Government of Canada bond yield in excess of 4.5% in 2 or 3 months, and it's time for you to lock in, you will have a pre-approval booked at today's rate and you'll be able to save that difference. The best thing a Canadian consumer can do for themselves today is get a pre-approval. Even if interest rates drop from now, then you just get a new rate. It'll be lower. You know, you've already locked into the worst case scenario. And if interest rates continue to shoot up, get a pre-approval. You'll have a pre-approval and you will be entering the market in 3 or 4 months at a locked in rate from today. This is something we've been telling people to do, for the last year or two. Again, it doesn't cost you anything. You call your mortgage broker or your bank, although I would definitely prefer you deal with a mortgage broker. I think you're going to get a much better rate, but get a pre-approval. Costs you nothing, locks in the interest rate. It's like an insurance policy against increasing interest rates. You got to keep in mind, right? This is they call it the inverted yield curve. So the shorter term bonds, the 1, 2, 3, as you go further out, the yield drops on the bonds because of the expectation that interest rates are going to be falling. We did a show a couple weeks ago now where we were talking about taking a 3-year rate. At the time, I think we were at a 5.6. That 3-year fixed rate right now is at a 5.9. So it's 30 basis points higher. So if you listen to our last show and locked in a pre-approval because you have something coming up, whether it's a purchase or just a renewal or a refinance coming up at your maturity, you would have saved yourself 30 basis points. I don't think we're going to see fixed rates go up much higher from here, but it's free. Again, it costs you nothing to lock in a 3-year fixed rate. So if you're going to take anything from this video, go out right now, make a phone call, go online and get yourself a 3-year fixed rate pre-approval. And then have that pre-approval as an insurance policy so that if and when it comes time for you to renew, and let's say your bank doesn't give you a competitive rate, shocker, you've got something in your hands.
Pre-approval is good for about 90 to 120 days too, right? So, I mean, if you know that interest rates are market's changing, you can just call that person back up again and say, hey, get me reapproved now before the interest rates go up tomorrow. Kick that out another 120 days, right?
Yeah, I like the way you're thinking about it, right? If you have a $500,000 mortgage, why aren't you paying attention to it the same way you pay attention to the $25,000 you have in some random biotech company in your TFSA, right? Your $500,000 mortgage, if it's coming up for renewal in 3-4 months, you should be rolling pre-approvals, right? Get your pre-approval. If you had it from a couple weeks ago and it was locked in at 5.6, you can feel smart about yourself. You're going to save that 30 basis points and you can hold off a little bit. Remember, 30 basis points on 500 grand is $1,500 a year for 3 years is $4,500 after tax money. It is not nothing. Think about how much that biotech stock you hold in your TFSA would have to increase by.